Hello and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities space. My name is Jesse Day. Before we dive in, standard disclaimer: nothing here is investment advice. Do your own due diligence. And today's episode is sponsored by ARC Silver Gold Osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARC SGO and owner Ian Everard. Have bought from ARC, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307 264 9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. And today's guest is the author of the Gold, Goats, and Guns blog and the host of the Gold, Goats, and Guns podcast, dedicated to speaking truth and destroying narratives about politics, markets, and culture. It's Tom Luongo. Great to have you back on the show.
Thanks, Jessica. I appreciate the invite. It's been a while. This just should be a fun talk.
Yes, it certainly has. I want to start with a really broad question. You can take it in whatever direction you'd like. And that is, what are currently the main themes and trends you're watching when it comes to politics, markets, geopolitics, things that you think more people should be paying attention to?
Oh my God, that's as broad a question as you could possibly imagine. I'm not really sure where to start. We only have 45 minutes. So you can leave because it'll take me that long just to get started. No, seriously, it is that complicated because unfortunately, the way I see the world, it's all connected, right? I mean, the geopolitics, the finance, the culture war, the desire to break down the nation state, the transition to global government, like COVID. It's all part of one big macro story. And then so you have to ask yourself, well, where are we in that story? And if you're coming into the middle of the conversation, I might sound like a lunatic. Well, if you're coming into the beginning of the story, I sounded like a lunatic, and I probably will sound like a lunatic this afternoon, and nothing will have changed. But what I think where we are right now, 6 months out from the American election, is a whole bunch of people desperate to try and not have the current state of the way things operate in Europe, the United States, and to a lesser extent, Israel, change at all. Now, that being said, the commodity markets are completely in the crosshairs of this because ultimately we're dealing with the collateral of the world, right? Because without, while the financiers in City of London, Wall Street, and Frankfurt and Brussels would like you to believe that it's, sovereign debt and our ability to pay taxes is what forms the collateral of the world. I don't agree. It's our ability to pull oil out of the ground, turn it into energy, and actually have an economy that's 2 stages removed from subsistence. That is the collateral of the world. Okay. From that springs their ability to tax us by pointing guns at us and all the rest of that, rotten authoritarian nonsense. So, and I keep coming back to the same thing over and over again. Who does and who doesn't have collateral? And by collateral, I really mean oil. And then by a second extension, who has the uranium, and who has the copper, and who has the lithium and or iron ore and the coal and all the things we need to run a modern economy. And none of that runs on unicorn farts and fairy dust. It runs on oil, coal, natural gas, and all the rest of it. So that being said, there are political forces attempting to keep the price of oil under control for geopolitical purposes, i.e. to quote unquote starve Russia of, oil revenue, which is failing disgustingly badly, as the Russians are going to book twice as much profit this year as they did the year before. And that was twice what the estimates were going to be. And it's just ridiculous. The Russians are making money hand over fist. And they're making money hand over fist at only pumping 9.5 million barrels a day as opposed to 11 million barrels a day. You do the math. The Russians could cut production to another 20%, which would gut the world economy, and the price of oil would go to $110 a barrel, and they'd make the same amount of money. Now, that would incite inflation around the world. It would call the central banks bluffs, and all the rest of it. Who is at the far end of the collateral chain. I keep saying this over and over again. I'll keep saying it until people finally get it. It's Europe. Who doesn't produce hydrocarbons? Europe. Who wants us to stop using hydrocarbons? Europe. Everybody else is basically telling the Europeans to go pound sand. So you'll have to ignore my dog. She's crazy. And there's no way to stop her other than like putting her in a crate. And we've passed that Rubicon. I forgot to put her away before we started this talk. So they're in the crosshairs and they know it. And they have agents all over, and they have agents everywhere, especially in the United States government. And so the election in 2024 is going to be a referendum as to whether or not they can pull off what they pulled off in 2020, which was a coup by the intelligence agencies, the military-industrial complex, and or their benefactors in Europe, or the beneficiaries in Europe, to keep Joe Biden or some facsimile thereof in power. At the same time, you're seeing them also kind of prep for Donald Trump to return and then neuter him so that he's bound down in either multiple wars or bound by legislation that precludes him being able to repeal anything, barring him getting impeached, yada, yada, yada. So we're seeing all of this happen in the amount of time it takes to limp us to the congressional reset in August. This is a very important point to understand as to why. I don't know who Mike Johnson is. I didn't know who he was before he became Speaker of the House. I had high hopes that he would be the right guy. He is clearly not the right guy, but he did, hold off Ukrainian funding and foreign aid for about 4 or 5 months. But at the end of the day, when they really put the screws to him, he folded. Did he delay things long enough to change the outcome of all of this? I don't know. But I know that they were getting really close to running out of runway, because the histrionics surrounding Ukraine aid to Israel and everything else that he betrayed everybody on, required the full court press from David Cameron, from Andrzej Duda, the president of Poland, of the European Union, of France, of everybody went to Trump and to Johnson and said, you have to pass this Ukraine bill. You have to pass this Ukraine bill. You have to pass this Ukraine bill. Because, of course, a lot of that money is going to get laundered through Ukraine in order to keep European banks from imploding, because Jerome Powell refuses to back off of 5.5% interest rates. I told you, folks, we're going to go around the world really quickly here, because all of these things have a similar thing in common, which is that the Eurodollar system is being drained. The Eurodollar system was a creation of the City of London post Bretton Woods in the late 1950s. It has, and it ruled the roost for an awfully long time, and it ruled Federal Reserve policy for an awfully long time, either willingly, as willing collaborators, or unwilling collaborators, as the case may be. I happen to think that Powell is a very unwilling collaborator and is now fundamentally understands this process and is working overtime and for the rest of his term as Fed chairman or FOMC chairman to implement a culture change at the Fed, which will ensure that the Fed goes back to being the bank of the central bank of the United States rather than the central bank of the world, and the world can go hang. That's not going to mean that the United States doesn't get its hair mussed, that we're not going to have to go through a nasty either recession or stagflationary period, or a whole bunch of stuff that's going to happen. Loss of global reserve status, rising interest rates, dogs and cats living together, mass hysteria. But coming out the other side of our funding crisis, of our political crisis, is the potential for a restoration of, I wouldn't say sound money, but sounder monetary policy coming out of the United States and fiscal policy coming out of the United States. And of course, every force imaginable on the planet is arrayed against that very idea. The Russians don't care. They're already out. They don't give a damn. Mostly the Chinese don't care, other than the fact that Anthony Blinken keeps threatening them with, sanctions and pulling them out of the global and freezing them out of the global financial system and the dollar system and everything else, which would be catastrophic for the entire world and literally would be, an act of war. We've already committed multiple acts of war against the Russians, and they still haven't declared war against us officially, but they've got a really good, long, traditional. They've got a lot of experience fighting proxy wars against the West. Let's just put it that way. They're very good at it. So, and they continue to prove that they're very good at it. So, in that context, I guess the big question is where are the prices of collateral going? Where's the price of oil going? Where's the price of copper going? Where's the price of silver and aluminum and soybeans and all the rest of it? Coal prices, iron ore, 62% iron ore up. It's that simple. Up. Copper is screaming at us that we are headed towards some kind of global conflict. Copper closing above copper closed above like 450 the month of April, but any move above like 415 was a massive technical breakout on the long-term copper chart. So, and now, a monthly close above the 450 area, another monthly close above the 450 area signals that copper's going to $5.50, possibly even $6. While everything else has taken a little bit of a nosedive in the last couple of weeks as the dollar has backed off, the Fed nominally dovish, we saw some central bank interventions, which we'll have to get into in the next little bit. But the reality is that in the short term, gold and silver rallied, oil rallied. They've been pushed back. But at the same time, Bitcoin was pushed back. But so all the collateral assets have been pushed back in some ways. But natural gas prices in the U.S. have broken out. Copper prices have broken out. Uranium prices refuse to back off. Aluminum prices are starting to break out. Nickel prices are starting to break out. Lead prices are starting to break out. So, I don't foresee inflation backing off, and so therefore I don't see the Fed backing off of higher interest rates because they won't be able to with 4% unemployment and 3.5-4% inflation. They can't do it. So otherwise they would lose all their credibility. Now the ECB is going to do that, but the ECB doesn't have any credibility, and that's going to be the shift in perception in the market's going to change all of these dynamics. The markets still believe that in some way, manner, shape, or form, the ECB is more prudent and in better fiscal shape than the United States is. And that, frankly, I think at this point is a function of narrative. It's a function of what everybody keeps saying every day to shift the Overton window in this direction. And that, oh my God, look at how insane things are in the United States. The border and this and oh my God, locusts. Like it's all just ridiculous. And it's also mostly a lie. Well, it's not a lie. Yeah, things are terrible over here. Things are not good, but they're certainly worse in Europe. And they need a war to justify what they actually want to do. And that is to default on their sovereign debt and institute, a digital euro, a new payment system, default on their debt, and reboot their banking system, and leaving the same people in charge. Good luck with that. The European people don't want it. The Americans are telling them, okay, if you want that to happen, it's not going to happen on your dime. It's not going to happen on your time, and it's not going to happen on our dime. We're not going to go first. We're not going to destroy ourselves first. You are. You want to destroy yourselves. You feeling froggy, you take that leap. But we're not doing it. And you can see that across multiple idioms, Jesse. You really can. And, getting into the weeds of, is the commercial real estate market in the United States falling apart? Is this happening? Is that happening? Of course. We went from 0% to 5.5% in less than 18 months. After a decade at the zero bound. Like, of course there's going to be misallocation of capital. Of course there's going to be malinvestment liquidation. Of course there's going to be all these things. I don't know. Did you not study like even Keynesian economics? Even they got that right? So at the end of the day, for commodity investors, you have to realize that central bank policy dominates the value of commodities because that's what we actually pay for. In their crappy currencies. And if they're fighting amongst themselves and they're starting wars, it's not going to be good for commodity supply chains. And so therefore, just on a supply constraint model, you have to assume a strong bid under all commodity prices. You may not want to believe in the middle of a global recession that the oil is going to go back to $140 a barrel or anything crazy like that, or whatever. You don't have to believe that, but commodity cost push inflation is real. We saw it after COVID, and we're going to see it again, and we're going to see another round of it. We're already beginning to see another round of it. It's already coming back. Hell, Trueflation a month and a half ago was running at, they were running their daily note was about 1.7%. It's now in the United States. It's now broken back to 2.5. Okay, it's going higher. Why? Because higher oil prices are finally being baked back into the cake. Higher electricity prices are being baked back in. Home sales are still not backing off, or at least home prices aren't backing off. Maybe home sales are backing off, but home prices aren't backing off as people rotate around the country, get out of the frankly shitholes of Democrat-run cities and into places where normal people live. Like, that's happening. It's real. And then those people cash out and can take the residual off their home and put it in, treasuries and make it 5.5% and have more disposable income and the same mortgage they had before. That's a real effect. Europe doesn't have that. And they're not going to have that. So it's just a matter of time before the European banking system finally just implodes. And every day you can see Janet Yellen and Christine Lagarde trying to manipulate bond markets and bond spreads to keep this thing afloat yet another day, yet another week, whatever. So there you go. That's one aspect of the big overview of what's going on.
Yeah, I love it. I want to get your view on gold's rise at this point, maybe through more of, you view things through a geopolitical lens quite often. From that perspective, why has gold risen the way it has? Is this a weakening of fiat currency, as some people like Alistair McLeod point to? Is this largely driven by central bank buying? Are we actually headed towards some sort of de-dollarization scenario? This is another topic that gets kind of hyperbolic depending on who you talk to about the East is going, the BRICS nations are going to divest themselves of international trade using the dollar. They're going to create their own currency system, potentially backed by gold. What is your view on gold's rise and where you see it headed moving forward?
I think it's all three of those things. I don't think it's any one of those things primarily. And if it is any one of those things primarily, it's central bank buying, because they're now 15 to 20% of the market. I mean, you can't argue with that point. Like, that's 20% of gold demand on an annualized basis. That wasn't there 15 years ago during the last bull run. The last bull run was purely friggin' driven by retail, right? This one's being driven by central banks. I mean, so in that respect, and rightly so, because in order to, we're in a currency. I hate to use Jim Rickards' term on this. Not that I don't mind quoting Jim, but I hate the term currency war. But we really are in that kind of scenario where we have a whole bunch of people who are balance sheet constrained because the debt on the central bank's balance sheets are now overwhelming the collateral that they have to back up the assets, and the leverage is now too much. When you have something like the ECB, where 85% of the value of its balance sheet is subject to an interest rate shock, and that interest rate shock is not under their control because it's really controlled by the Fed, right? Because bond spreads between sovereigns kind of controlled by the market, especially on the long end of the yield curve. So if the Fed raises interest rates, German interest rates have to rise. They can't stay there at 1% while the Fed sends the U.S. 10-year to 4.7%, unless, of course, Germany, as an economic actor, is taking market share from the United States. Good luck with that, because that's not happening, because the Germans decided to commit energetic harakiri as well, because they committed themselves to this path of saying, we can't pay the debt back. We're just going to run up the bill and then dine and dash in a government sense, okay, and then leave the restaurant owner, that would be us, holding the bill. So retail, it's never a lot of money, right? China encouraging people to buy gold. right? Shanghai Exchange is doing bang up business. They're encouraging people to buy gold. My friend Vince Launchy and I like to put it, yeah, China owns their gold through their people. They're encouraging that. We're not encouraging that here. I mean, they're not saying no to it, but what they are saying is that we're going to put capital controls on the flow of physical gold out of the United States so that it can't flow anywhere else. And that's going to be very difficult for people to do. And it's only going to flow to quote unquote friendly countries. Well, the way the Blinken State Department is operating, there aren't going to be any friendly countries to the United States left in the world by the time this guy gets done with anything, because he's the ultimate anti-diplomat. But that's that's tangential to the point. So gold has to ultimately re-enter the monetary system officially in order to offset the balance sheet impairments of all of these countries. So they can do one of two things. They can shrink their balance sheets, which is what Jerome Powell is doing, get rid of the treasuries and the mortgage-backed securities on their balance sheets, which are, worthless, or they're unsaleable, but let them roll off and just let them go away, shrinking the monetary supply and M2 and all of that, and the leverage of the Fed's balance sheet relative to our gold reserves, and simultaneously not really fighting the rise in the price of gold. They're going to allow it to rise in such a way that it doesn't cause too much loss of faith. So $200 up, $100 down, $200 up, $100 down, $300 up, $150 down. Over time, grind it out until they can't. Now, maybe they're playing a losing game. I'm not here to answer that question, right? Other people who are far more down the path of believing that the whole thing's got to collapse before it can get better, the Peter Schiffs, the Alistair McClauds, that's their opinion. That's their argument. I'm not sure I agree with that argument. I think the global financial system is a lot more resilient and a lot more complicated than these men want to, give it credit for. And I think they also don't give us enough credit for not wanting the system to break down in a disorderly manner. And so we're willing to put up with the fiction that the dollar still has value, that this, that, and everything else, because the opposite is to invite, Mad Max, and no one wants that. So it's a Hobson's choice in a kind of way. We've destroyed the world. Now no one can admit that we've destroyed the world. So we kind of all have to go along like Wile E. Coyote, having run off the end of the cliff and just never look down. But we can not look down for an awfully long time with the amount of liquidity that's been pumped into the system. Hate to break it to folks. So while, eventually the system has to collapse, I leave timing to the gods, man. I can see the argument, but I'm not going to sit here and say it has to be this and has to be that. And I am not wedded to any one view of how this thing ends, because look, I'm an arrogant bastard, right? I'm a smart guy. I know this. I got an ego the size of, my living room. Fine. But I'm not smart enough to know how this thing ends. And anybody who thinks that they do is fooling themselves. Okay. And, it's just that simple, because I thought the world was going to end in 2008. It's 2024, dudes. And, this thing may not die until after I'm dead. And versions and parts of these systems and parts of these institutions are going to hang on for hundreds of years. Just like we're still dealing with, the aftershocks of the formation of the Bank of England, the Reformation, and everything else. The other day, in the last issue of the Gold, Goats, and Guns newsletter, my partner Dexter White reminded everybody that the width of railroad, the railroad gauges in the West are based on the width of a horse's ass. Because that's what the road width was. And we're still living with that. No one's sat down and done a cost benefit SWOT analysis on whether, on whether a Six Sigma analysis on whether or not we should change the rail gauge. No, we've always made railroads this wide, and that's how wide they're going to be. Well, guess what? We can keep this thing going, because that's just the way it's always been for an awfully long time. So, is gold going to rise? Yes. Is it going to go to some stratospheric level like 80 grand an ounce? No. not unless the whole world goes bidless for all other assets. And okay, now extrapolate what that looks like. Do I believe, though, there's going to be a negotiated settlement between the amount of balance sheet leverage we're going to be willing to accept from our central banks versus their gold reserves? Oh, that I believe, absolutely. I don't know what that number is. I don't know if it's, if we're 10 to 1 today, or just let's say we're 10 to 1 today. I think it's worse. I think we're more like 17 to 1. Well, let's just say we're 10 to 1 today. Is that number going to be 4 to 1, 3 to 1, 1 to 1, 5 to 1? I don't know. And however much we're willing to roll off the balance sheet versus how much gold we're willing to hold will determine what the final price is going to be. But at some point, as Alton Parzar put it, we're going to have Bretton Woods 3 in the West. The East is already out. And gold will be the common denominator, and the dollar will wind up staying on probably as a unit of account. We'll lose its store value outside of the United States status, and it will lose its kind of medium of exchange as well for important stuff. Gold will wind up being the medium of exchange until we can come up with a new system. At this point in time, gold is not the end game. Gold is the transition period between new systems, because it's been removed from the monetary system directly because it has deficiencies as a global money. And you can't get around that. You just can't. Last I checked, I can't ship you atoms of gold to buy screws. I don't know how to do that. We had the technology to do that, fine, but we don't. More likely, we're going to use some version of Bitcoin, right, as a medium of exchange, because it makes more sense, right? We already use a version of Bitcoin today. It's called the U.S. dollar. 95% of all dollars are digital anyway. It's all semantics.
I do. I want to circle back to what you were mentioning about governments wanting to default on their sovereign debt and introduce some sort of digital currency. It sounds like you ultimately think that will fail. It seems like quite an ambitious project to create some kind of CBDC, especially on a global scale, which, as I think with the Bank of International Settlements was talking about, or maybe it was the IMF. One of these organizations was mentioning that. And you also ultimately feel like the globalist agenda is going to fail in the end as well. So maybe you could speak to both of those things: the central bank digital currency, why you don't see that working out, and just the globalist agenda in general kind of crumbling eventually.
Because they're both monumentally stupid and anti-human.
Yeah.
It's really not more complicated than that. It's like they're just dumb. Like, it doesn't work. Like the whole idea that, oh yeah, we're gonna continue to allow these people who locked us in our homes over the flu and injected us with an experimental gene therapy to sterilize us to keep us from getting the flu. Like, really? Like, we're going to believe them that they have our best interests at heart with whatever new form of money they're going to shove down our throats. Come on. Like, as I say all the time, pull the other leg and plays Jingle Bells. These people are so... This is where we have to back out of finance. We have to back out of politics. We have to get back into human nature, culture, the way people think, the way people operate. I was listening to a podcast with the great Ian McGilchrist last night, because I couldn't sleep because, World War III, and he kept going on about, and rightly so, he's talking about the problem between what we have today, which is a very left brain model based society, as opposed to a real society. Like, models are very useful, and the left brain deals in models, right? And the best way he put it was that, the map is not the world. The map is a representation of the world. If you think that the map is the world, you have a fundamental solipsistic error in judgment and in thinking. All of these people live in models that they've created in their heads. If they could cut off their bodies and from their heads and take their heads and stick them up into the ionosphere, or the net, they would. It's why they love all those stories about, you know, machines becoming human and this, and they love all this stuff because they're trying. That's what they believe. That's what they want. They want everybody obsessed with a model that's fake. And the rest of us don't live in that world. They're trying to turn us into those people by handing us flat screens and social media and false dichotomies, and turn us all into, if not A, then B, adrenaline based Momo junkies. But that's not what this is. That's not the world. The world is, that calm you feel when you pet your dog, that that weird feeling we all got the first time we held a gold coin in our hands. And we went, and everything changed. It's that what we feel when we hold our first child in our hands. Okay? These are things that you can't take away from humans. And so the push towards central bank digital currencies, the whole globalist agenda of universal surveillance and punishment isn't going to work because human beings aren't disembodied brains. And the cycle always turns. And the farther we get from equilibrium in one direction, the more likely the harder the snapback is going to be in the opposite direction. Cycles are real. I'm a big fan of Martin Armstrong from that perspective. I think Marty's contribution to society isn't necessarily Socrates, which I think is interesting. And I'm not, and I won't lie and say that I don't look at it and try and, create, gestate ideas off of it. But it's just his understanding that the whole universe is cyclic. And, that dovetails with what I understand about physics and, the electromagnetic universe, model of reality, which is far closer to the model of reality than the gravitic one. And I'm just enough of a physicist to know the difference. So, you have to get into that stuff to understand why we're going to wholesale reject all this. Because as they push the culture farther and farther away from metaphor and truth, the more people are going to come back to I don't want to turn this into a religious discussion, but the more they'll turn metaphorically back to God, whatever God means to you, right? And you saw this in Russia post-Soviet Union. You just did. And the ultimate technocratic society of the 20th century was the Soviet Union. It failed. It left a scarred couple of generations having children who then all have a much stronger faith in the way that on how the world operates, with a much more humble version of what the world looks like. So, the old adage that, those the gods tend to destroy, first they drive mad. We're being run by mad people, and we can see them for their madness. And now we have a choice in front of us. I was giving a talk up in Lloydminster, Alberta over the weekend, and it was that this is, again, I hate to go in this direction in a commodity thing, but you have to understand that, T.S. Eliot asked this basic question in The Wasteland. He was asking the question, he was struggling with, whether he should embrace madness or grace in The Wasteland. And he eventually asks the universe for an answer, asks the universe to help him, and the universe answers him. And he chooses otherwise. What all of these disembodied brains miss from all those great Philip K. Dick novels that they're all obsessed with and turned into movies, most of them shitty, by the way, is that's the key to understanding every Philip K. Dick novel. An average, normal, everyday person being put into unbelievable conflict with the fundamental nature of the universe and being asked to choose, are you going to succumb to it and go mad and embrace schizophrenia, or are you going to choose grace and, work your way out of it? Go read Do Androids Dream of Electric Sheep, The Three-Subject Matter of Palmer Eldritch, Dr. Blood Money, Ubik, blah, Flow My Tears to Policeman's Day, all the same book. Even the crappy ones like The Zap Gun, like they're all the same story. And, it's very, very real. So that's why I think it's all going to fail. And, people just aren't, they're not machines, folks. McGilchrist's point is that we are not machines. And I happen to agree with him completely on that front. We are not machines. We are animals who think we have rational reason as to why we do what we do. And I got news for you. That's just the press secretary saying, justifying whatever it is that we had already chosen to do. And you have to realize that we are so much of our behavior is so much more unconscious than we'll ever imagine. And that's the part that we have to, in a sense, kind of get back to. So I know that probably wasn't the answer you were looking for, but
No, it was super fascinating. I like talking about those sorts of things as well on this program. As I bring up a lot, I left Canada when Justin Trudeau was re-elected in October 2021, and relocated to Serbia to get away from a lot of the insanity that you're talking about there. So it's a topic near and dear to my heart, and I think it's worth discussing. But I do want to switch back to markets here now and just ask you, as much as you can reveal, where you're allocating capital, where you're looking for opportunity in the markets right now. You mentioned you think commodities are headed higher. Is that more of a sustained long-term bull trend you see? Is that something more temporary? Are there any specific commodities more than others that you're currently looking for opportunity in? Fill us in there.
sure. I think industrial metals have been beaten with the ugly stick beyond their cost of production, right? So you look at all the charts. I was looking at Vale yesterday for one of my patrons, and their Vale, the iron ore producer, and just sitting there generating an 11% yield. It's not a stock I have in my portfolio, but it was a stock I was asked to look at every once in a while for my patrons. Well, I do bespoke chart reads for them on the private podcast that we do twice a week. And sometimes good investment ideas come out because my people are phenomenal. They're better at this stuff than I am, to be honest with you. So yeah, Vale sitting at long-term support at 11%. Do you really think in this environment iron ore prices are going to break down by 50%? In dollar terms, I don't. So copper producers, but I also think that we have to accept that interest rates are going higher. So what I would say is this, and I've been telling people this for a while, and there's no good way to short these markets that I'm bearish on, because you're not allowed to short municipal bonds. You're not allowed to short certain types of, you're not allowed to short REITs. You can just divest yourself of them, right? I think that in certain aspects of the real estate investment trust market are undervalued because it's been the baby thrown out with the high interest rate bathwater. So I'm still bullish and have been forever and a day on things like timberland and farmland within the context of real estate. I think once the markets get used to the idea that we're going to be at, above 4% at Fed funds rate in perpetuity, once the malinvestment's been worked off, once the holes in the bank's balance sheets have been worked out, once the commercial real estate bust has occurred, and we've had some rotation of capital and whatnot, very interesting. I think that there's good opportunities for well-run. This is the problem. Like I know for a fact that there are insurance companies. They're not public companies, unfortunately, that are just going to make out like bandits in the commercial real estate bust, because they're going to go in. They're going to be able to buy up all these commercial real estate loans at 40 cents on the dollar, and then they're profitable. Throw off 12% yields at 60% occupancy rates and make unbelievable money. And they're going to be the beneficiaries, and so will some of the pension funds and whatnot. Daniel DiMartino Booth and I have been both beating our shoe on the table like Khrushchev about this for close to 2 years now. So commodity prices, yes. Gold, yes. Silver, simply because it's going to play catch up at some point, because gold will get too expensive and silver will do what it always does. But silver is primarily an industrial metal, so please don't trade it like a monetary metal. Treat it like a trade. It's a temporary trade. Gold is going to just continue to rise as long as we have in an up and down fashion, until we finally do away with this funny money based on debt. I don't know when that's going to happen. I don't plan on selling my gold ever. I plan on just selling my silver at some point towards the top, converting it into gold, and then willing it to my daughter. Like, that's what I plan on doing with it. I don't see in the rest of my life that I'm going to have any reason to divest myself in gold, for example. I feel similarly, but less convictedly about Bitcoin. That's not to say that I don't believe that proof of work isn't the thing that I'm most bullish on. I'm still a proof of work maxi, not a Bitcoin maxi. So, and for those of you who are in crypto, you understand exactly what I mean by those two things. Where else? I think you should be short U.S. Treasuries. I think you should be expecting the Bank of Japan to continue to intervene in the yen market. And I think when the market opens, we're doing this on Monday. I expect the Japanese yen I think there's going to be an awful lot of short covering in the Japanese yen. And it's going to happen. It's going to go on for a while now. I think you still want to be short the euro. You still want to be, I don't know, you want to go, the yen is going to be weird, but you want to be short long-term government bonds. And if you can be. So in the US, you can be long TBT, right? But I don't know where you would do that if you wanted to like short German bonds or, Japanese government bonds or whatever. I'm not a big fan of emerging markets in the strong dollar environment. I still believe it's going to be a strong dollar environment for the next 18 months to 2 years, depending on the political outcomes in the United States. Those are always the wild card. If Donald Trump comes back into power, you can fully expect that he's going to want a weaker dollar. He's Donald Trump. So maybe the dollar milkshake-esque arguments are going to last another, year to 18 months. And then after that, I don't know. I don't have a good answer for you. We'll talk about it between now and then. But yeah, at this point, let's put it this way. It's really simple. The division of labor is contracting. It's not expanding. When the division of labor is contracting in a situation where the monetary system has to change and we have to go back to closer, we have to rein in the edges of the tree that is the division of labor. Well, that means the closer we get to the trunk, the closer we get to base commodities. Okay. If we're in our commodities, your problem environment, you don't want to be out there betting on AI at the far end of the, AI derived stuff. You don't want to be there. You want to be in, railroads, because what will matter is who's got the commodities and how they can efficiently transport them to market, rather than what their price actually is. Because that's, I think, in times like this, it's going to be midstream and and to a lesser extent upstream commodity stocks that are going to do well. I'm not a big fan of downstream. I don't know what downstream's going to do, but world needs energy, world needs natural gas, world needs coal. It's not going to get any easier. Governments are putting up protective barriers everywhere. Shipping is becoming, excuse me, Jenny. Sorry. What was I saying? The shipping is becoming less and less secure, right? That's a big deal. So shipping costs are becoming a bigger deal. More people than just the U.S. Navy is going to have to go out there and protect, global shipping lanes, and you can get on the United States all you want, but for the last 70 years, the world has benefited greatly from the U.S. Navy not charging anybody directly the bill for protecting all their oil tankers and all their dry weight tonnage. Like this is reality, folks. We protected you. It doesn't matter whether you like it or not. It doesn't matter if we dealt ourselves a better hand at the table geopolitically in other areas because of it. Yes, that's true, but you can't deny what we did and why we did it and how we extracted value in other ways. You can argue whether that was moral, right, or otherwise. I'm happy to have that conversation with you. But from a pure market perspective and pricing perspective, this is not something you can ignore.
Great. Well, Tom, it's been a fantastic conversation. Thank you so much for coming on the show. Before I let you go, for those who want to learn more, tell us about the Gold, Goats, and Guns blog and podcast and your Patreon, anywhere else you want to send people.
Sure. Well, the first thing you can do if you want to see the very worst version of me on a daily basis, where I will try and get on everybody's last nerve, please go to my Twitter feed at TFL1728. I think it's a hoot, but everybody else thinks I'm a Zionist now, so God knows. The blog is the public face of it. It's where I cross post all the episodes of my podcast and any public stuff that I write. And if you see me on Zero Hedge or Lou Rockwell or any of the other places, it all started there first and it was scraped. So if you want to be a fan of the thing, and not that we monetize the blog at all, we don't really care. We prefer you to become patrons over at Patreon, where we have really two tiers of service. Everything not including the newsletter, and then the newsletter. And the newsletter is a kind of classic retail investor level in newsletter designed to give you a model portfolio of where we think you should be in these markets, along with all unique and original material, trying to look ahead as to where we're going. And it's about 12 pages every month, and anywhere from 11 to 12 pages. And then during the week for everyone else, we have twice weekly, 45-minute to 1 hour, what I call market reports, which are a mix of, rants you just heard about the issues of the day, along with technical chart reads of what's going on in all the major markets and how that folds back into what we're seeing geopolitically. And we do that along with any private podcasts and or blog posts that I put out there as well. Okay. That's what we do. And it's not expensive. It's $12 a month.
I'll put links in the description below for anybody who wants to check that out. I will say, when it comes to your blog posts, I actually never miss one. I find them highly engaging, very interesting. So I recommend people do check that out as well. Links will be in the description. And Tom, thank you once again for coming on the show, sharing your knowledge with the audience.
Appreciate it, Jesse. We'll do it again sometime if you're willing.
And thank you for joining us today. As a reminder, this episode is sponsored by ARK Silver Gold Osmium. Visit their website at arksgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arksgo.com for all of your precious metals needs. And be sure to tell him that Commodity Culture sent you. And I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.